No matter the stories you've heard about credit, the actual truth is that it determines your financial identity. Essentially, good credit means a better financial identity, and that's why you need to start building excellent credit right from a young age. I would go as far as to say that with good credit, the entire ballgame shifts in your favor. Don't believe me? I was banking on that. So join me for the rest of this video to discover exactly how good credit can help you financially. Hello, and welcome to Credit Guys, where we talk about improving your credit score so you can enjoy the good things that come with it. I own a credit repair and consulting company, which means I help people improve their credit worthiness and teach them how to grow and leverage credit. If this is a topic that you want to learn more about, subscribe to the channel and turn on notifications to get alerts when I post new videos. So I'm going to be going over 8 steps on why good credit is a game changer for you. Okay, let's find out. Number 1, easier and faster credit approval. If nothing else, good credit means that banks and other lenders will be more willing to approve your credit applications. That's good news for you because whenever you apply for, say, mortgages, loans, or credit cards, you stand a higher chance of things going through. Ultimately, the process becomes way easier and less time consuming than it would have been if you have bad credit. Number 2, lower interest rates. So here's something you need to know. The bank or lender will check your credit score to determine your interest rate whenever you apply for a mortgage, credit card, or any other loan. If you have good credit, things will be great for you because you'll be given lower interest rates. And just to give you a general perspective, let me give you the average estimated interest rates for personal loans based on VantageScore risk tiers. So if you have very good credit, meaning a score of 800 to 850, your loans attract a 6.59 interest rate. On the other hand, if you have poor credit, meaning a score of 300 to 579, your loans attract a way higher interest rate of almost 16%. Number 3, acceptance into some job positions. Yeah, you heard that right, some jobs. For example, those that involve handling money might require a credit check to ascertain that you can handle money or something like that. If you have excellent credit, being hired over those with poor credit is a no-brainer. Number 4, large credit card and loan limits. There are many good things going for you if you have excellent credit, and let me just tell you more about that. You qualify for larger loans and higher credit card limits if you have a decent credit score. And don't just take my word for it. A recent experience survey revealed that the average baby boomer, a person who was born between 1946 and 1964, had a credit score of 731 and a credit card limit of about $40,000. As for millennials, people born between 1981 and 1996, the average person had a lower credit score of 668 and a corresponding smaller credit limit of about $20,000. With that as a reference, I want to draw your attention to the fact that baby boomers have had more time to build better credit, hence their higher loan limit. Number 5, easier lease approvals. If you're looking to rent or lease residential or commercial space, you will need to be in good credit books. That's right, the most landlords will want to know your credit score before handing you the keys to their apartment or premises. Good credit indicates that you make your payments on time and can be trusted to make rent payments without fail. Bad credit, however, is a red flag and no landlord wants that. So if your credit isn't impressive in the least, you'll have a hard time finding housing. Or if you do find it, the landlord may ask you to put down a hefty deposit up front. Number 6, better insurance rates. Your credit also affects how much insurance you pay for your car. Even though insurers have been criticized for this, it hasn't prevented them from looking at potential clients' credit history before deciding what premiums to charge. And it makes a whole lot of a difference. A higher credit score decreases your car insurance rate, often significantly, regardless of the company you approach or where you live in the US. On the other hand, bad credit makes your coverage more expensive. How much more expensive? Well, poor credit could double rates, while outstanding credit could reduce rates by as much as 24%. Number 7, more lucrative credit card rewards. Many credit card companies offer a variety of credit card rewards to attract and retain clients. These rewards include air travel miles, cashback on purchases, lower zero introductory rates, gift cards, redeemable points, and so on. Of course, no single provider will have all these benefits. Most will combine a few. Applying for a specific credit card doesn't mean you automatically qualify for these rewards. The majority of providers will typically do a background check before approval. If your score is low, you will probably not qualify for the rewards. Number 8, save on deposits for utilities. Lastly, have good credit can mean the difference between getting your utilities with no problem and putting up a security deposit to get a connection. Worst case scenario, you might need someone else with better credit to sign off on your utilities. As you can see, having bad credit is not only expensive but also embarrassing, especially when you have to ask other people to co-sign your loans or utilities. But all is not lost. You can actually work your way back up to a good credit. So how do you get a good credit hassle-free? One option is to try and repair your credit the DIY way. In this case, you review your credit report for inaccuracies and contest those errors with the lenders. You may also need to make several calls or visits to creditors to try and plead your case and negotiate a plan. However, this route is often long, hectic, and in most cases, disappointing. The best and probably fastest way to turn your credit around is to work with a credit repair company. Basically, such a company does the heavy lifting for you in exchange for an agreed upon fee. They will analyze your credit report and dispute errors with creditors and credit bureaus on your behalf. They can also help you negotiate with credit services for negative marks removal. So, how has your credit affected you? Drop a comment below and don't forget to like the video. If you want to learn more about credit, make sure you subscribe and turn notifications on. Thanks for watching.